governments are going to make it harder because they also realize this, right? They also realize that they are going to be in a bidding war. And I think for some of the more established nations, they're not used to being in that position. So I would put like European nations, like the G7 nations, they're not used to being, they're kind of used to being like, oh, we're like the net immigration sponges. Like we take young, talented people from across the world and then kind of take them in. That's kind of politically changing for other reasons too. But I would say that even within that, like those countries are going to have to start getting used to like the reverse, like kind of a brain drain, the other way around, where it makes a lot more sense for people who, like we all have our personal circumstances, like you mentioned, family. I have family too, but there's just going to be much stronger incentives, whether it's 0% tax, whether it's just like a better entrepreneurial community, whether it's just like you just have more people working remote where it is, or the weather sucks. I mean, that's a huge one for Canada, by the way. The weather sucks in Canada everywhere. So to go to anywhere that's pretty warm is great for any Canadian. And I think like these countries are going to start to have to get used to competing in that dimension, but there's going to be like a lagging period as like kind of like a zombie period, I think, where it's like 20, 30 years, maybe even longer, where these countries just simply do not acknowledge that reality. And instead, what they're going to try to do is they're spending all this money. So now you have the welfare state, which is kind of continually, going to be the way it is. And that's kind of fixed, at least in the Canadian or the American context, and certainly in the European context. But now, in addition to that, you see this drive towards increased military spending. The idea that every NATO member should spend 5% of GDP. Whether or not you agree with that or not, like politically, sure. But what I'm just pointing out is just from an economic standpoint, like something has to give, right? You're spending more and more money. Your population is getting older. So you're going to spend more on healthcare and all these mandatory drivers. And you're also going to try to spend more on military defense. And you're also going to try to spend more on, all these other different things. And it's incredibly unpopular to raise taxes. So what are you going to do? Well, you're going to go after the wealthiest or whatever. But what that really means is they're going to go after like the people that are the most politically vulnerable. And among that constituency are people who are trying to exit the country, right? So, of course, increasing the exit tax is going to be very popular with people who vote in that country. I think that's in Canada, that's like one thing they're already evaluating, right? So they're going to make it harder to exit.
If you look at the history of taxation, they always want to tax the rich, and they always do tax the poor middle class. Like income tax is a famous example where they wanted to tax the wealthy and the income wealthy. But guess what? It now is completely on them. It really catches most of the middle range of income and middle range of wealth in each country, because like the very poor income people, they don't have a lot of income to spare, so they don't really drive a lot of income. And then the really rich, they don't have income. Like Elon Musk earns like $1 a year on Tesla's salary. They're like, we don't want income, we want equity. So it's always, I personally think you will never be able, and you should also not be able, to tax those people who make jobs and provide for the society in that sense, and build companies and build products and services, because they are the ones that really pay the most of the taxes with their companies and with their presence, and those bring a lot of financial energy into a country. And especially in this world where you can just spin up companies everywhere, where if you have a really interesting idea and you want to spin something up, for example, there's N26. It's an Austrian-Germany example. And N26 was an interesting banking idea. And it's a complete fiat thing. And like, it's just like the bank that I use usually. And those were two Austrians wanted to starting it in Vienna. But it was so complicated to get the banking license and all those things. And then they were like, hey, let's see if it's in other countries faster. They started in Berlin. I mean, Germany is not good at all, but like in Berlin, for some reason, they got it really faster. And then they started the whole thing in Berlin. and now it's a German company, and it's a huge banking institution now, and it could have, and it's global. They even have like banking in America now. They're a really huge banking institution now. They were not there at all like 8 years ago. And
Yeah.
two Austrians kind of started that. That's just like a very small example that it does matter
Mhm.
what a country is doing, especially in a digital world, especially in a remote world. And then also money all of a sudden is everywhere accepted. You can live on Bitcoin everywhere. There's so many things where you can get just pay in Bitcoin and get cash. You don't need a bank account anymore. I could live without bank account if I really wanted to. It's too much of a hurdle, so I don't do it. But my bank account is always empty. But that's why I'm always saying like, yeah, like I'm at N26, steal my money. There's nothing on there. Hack into my bank account. It's like there's literally you cannot get anything with that. Like there's no limits to it. Like the maximum is like maybe 2,000 euros. Like go ahead to do it. So it's it's like if you're in this world where money is everywhere available and you don't need KYC also for that, like you
Yeah.
have the possibility to do that, and then also you can work with a website. You can launch literally a website and sell stuff there, and you don't need anything. Then you're just like free citizen of the
Yeah.
world, and you don't care about anything. So those restrictions with like exit tax and all those things, like people are not stupid. People will not move to a
Yeah.
country that has like a huge exit tax. So the incentive is to tax like real estate because that cannot move out of the country,
Mhm.
and tax things that are kind of solid. And it's a hard to. Sailor always give this famous example of, I think it's an Italian port. I might be wrong about that, but it's a port that a lot of rich people really like to be there. And then the locals said like, oh shit, like they're not paying any taxes here, and they're using all our infrastructure. And then the political shift actually came to be, and they kind of made a tax for the rich people.
Mhm.
And what happened is all the rich people before the tax came took their boats and ran to the next port. And then in the next years, this port was kind of degrading really fast. And all the restaurants had to close, all the coffees had to close because they didn't pay taxes in like income tax, but they paid the tax in the restaurants and the hotels and all the things that they used there, and brought a lot of purchasing power there. Long story short, I think taxes will always benefit the capital that can flee in the
Yeah.
quickest way. So Bitcoiners will benefit from that a lot.
Yeah, and no, Robin, I think that's well put. And I just add to like two dimensions to what you were saying. Like the first is it's kind of a there's two parts. There's one part is there's like Cantillon effect still, even with taxation. Like people with who are closer to the political power, they tend to be the wealthiest as well, and they are able to dictate kind of like these credits or things like that that the middle class doesn't have any access to. So that's like one example. But I also think that there's so many perverse incentives, um, and in government, this tends to happen where there's an intentionality, but the highway to hell is paved with good intentions. And it's exactly the mechanism you described. Because what happens is the people who, if you design a system where there is a lot of incentive to leave, then the people who are wealthy enough will leave or find a way to get around the system. And not in a like illegal way, but just in a way where they comply, but also like in a way that they have a lot of skin in the game in order to figure that out, right? But it's the middle class that doesn't have access to these like privileges or, the working class. The doctor that's making like 400K a year kind of is a prototypical example, right? Because they're making just pure salary. And even I think what will happen, because I know the way Europe and I think other countries are trying to solve that is they're trying to impose like a wealth tax, um, and which I think would be flagrantly like just uh, from a principle standpoint, just terrible for people's privacy, people's autonomy, and everything like that. But let's consider what they're thinking, and like basically they want to tax through wealth tax, and then they want to close the loophole with corporates. So the whole idea was with the Biden administration back in the day, they were trying to get a global minimum corporate tax, right? So they're trying to close these loops as they're realizing them. But the problem is that you're creating these really strong incentives for people to, so that the people that you end up really hurting are the people who can't really avoid this, right? So it's kind of like the Cantillon effect in the sense that you really are penalizing the people that uh, earn just enough and earn that money because they are entrepreneurs or because they are building in, the country. I don't think anybody really questions, like, for example, like, is a doctor worth that much money or whatever? And is an entrepreneur worth that much money? Um, and I think that, when you have that amount of money, but it's being earned entirely in salary, and that's because like you're creating your value right now. Um, this is more for the doctor case, less for the entrepreneur case, but that gets entirely taxed at an unpreferential rate. And the other dimension I would add is that like it's the income tax, the taxation by itself is intrusive. It is the root of KYC. It is the beginning of the state being like, hey, you belong to me, and because of that, you have to proactively tell me what you've been doing. Anything that involves money, you basically need to tell me what's been going on, right? Otherwise, if you misstate these statements, we're gonna like charge you penalties, or we might even throw you in jail, right? So when you start from an affirmative standpoint of like, in order to run the state, you have to actually give as much information as possible. That's the beginning of really, you see this like KYC regime of like understanding, now you want to understand the entire banking system. You want to catch everybody who's committing quote unquote tax fraud or tax evasion, everything like that, right? It's a ready-made excuse to create that digital surveillance state across your finances and then across everything else, pretty much. Um, so, and that's only going to get worse in form and in practice with something like a wealth tax, because then you'll not only have to report what you earned that year, you actually have to report every asset that you've had, right? Including, for example, like if you have non-KYC Bitcoin or anything related to that. You would be put in a position where if you did not report that, that would be not compliant with the law. Right now, with an income tax system, that's not the case. You can have a stack, it can be non-KYC, and since you're not selling it for income, nobody really has to know, right? I mean, there are some filing conventions, like for example, if you own foreign assets or whatever, anyways. But in general, you don't really have to know. The state doesn't have to know that. But the wealth tax takes that another step further. And this is just kind of the directionality of it. It's like the tax, to me, what I've been telling people in my circle and even on like a couple of, in Bitcoin events and things like that, is that I don't actually have a huge issue with the rates. Honestly, like I'm able to structure the rates so that they're pretty even globally. Like there's ways where you can do that, right? Like you can get your money through a corp, and I don't spend a ton of cash, to be honest. So, I don't need to draw a lot of cash out for my day to day or anything like that. So there's a way to structure that where you're totally compliant, you're totally legal, but you have a lower effective rate. And that's because you choose to spend less or you choose to draw less, right? Um, but I think that even with all these different rate differences being so slight, the big difference is really the privacy invasion. That's what really bothers me. It bothers me that the state like proactively inserts itself. And that's the part where I culturally don't vibe sometimes, especially with non-Bitcoiners. I think Bitcoiners have a more intuitive understanding of this. They understand that like, taxation is the state inserting itself into your life, right? Into some of your most intimate decisions. And I think non-Bitcoiners sometimes they're like, oh, well, this is just a part of like modern society, and we're willing to accept all these different things. And you're doing something wrong if you accept all these invasions of privacy. But like even in the 1970s and 80s, I mean, another thing that happened other than the gold standard dropping was that the banks in the United States were mandated to report suspicious activity in their systems to the government. And this was something that, they at the time thought was unconstitutional, but which we now, many people just accept as like a ready feature of life. So you have this crime called money laundering, right? And what is money laundering? Well, money laundering is acting in a way that makes it seem like you are disguising yourself from this financial surveillance apparatus. So that's how extreme it's gotten in a way. Like you can now be penalized even if you do not do anything criminal at all in the sense of like anything. I mean, again, I'm not a lawyer, but like let's just say like you're not like the money is totally derived from like a legitimate purpose. You run a business, you're adding value, you're getting paid. Um, you still could get dinged for even just like putting in transactions. Like so, for example, if you're skirting the $10,000 reporting line, right? And that in of itself, like basically proactively makes you kind of like a criminal if you try to confront the surveillance state. And we take all these things for granted, but even just 30 or 40 years ago, these are things that even the banks would refuse to do or question in court. So I think that to me is like the real big root of all evil, almost, I would say, is that taxation is that reason for the government to check in on you like every year, and it gives them a reason. And other people in the country usually are pretty sympathetic to that argument. They're like, oh well, we want to make sure everybody's paying their taxes fairly. So yeah, we all just readily accept that our banks and our government are just monitoring every transaction we've ever made. And especially with the decreasing use of cash, and not as many people are using sats. I mean, I hope that they do, but not as many people right now are. Some of that is because of the capital gains stuff that we talked about. Of course, if we could have a de minimis exception, which I know Frank Corva, Bitcoin Mag, and the U.S. politics crew are trying to get out of the U.S. Hopefully that spreads in other countries. Um, there are these things that can be helped with that, but in the meanwhile, you're really in a situation where there's more KYC, and that stems from that. So yeah, that might be like a good part to start winding down. I don't know if you have any final questions, Robin.
Yeah, yeah, we have gone long. I kind of overlooked the time, but yeah, it's an interesting question of like why do you tax me if you can print money? And then a lot of people are like, yeah, maybe because of privacy. Maybe they want the data and not actually the money. Maybe the data is more
The control
valuable.
too.
Actually, the data, with the data then comes control and all those things. Yeah,
Yeah.
that's a really really good point. Yeah, I have like 50 more questions, but I guess we have to find an end point at some point.
Yeah, I mean, it's just,
And
well, you got your day and I got, yeah. And if you do get audited by your tax authorities, you can't blame me. Okay.
yeah, let's make sure about that. We just have two more questions as we always
Yeah.
do in our end routine. The first question is always the same for every returning guest, and the question is, what have you learned outside of Bitcoin since your last appearance?
Yeah. I've been reading a lot about so I've just been reading a lot of different histories of different individual countries. So because of Bitcoin, I would say I've been able to visit so many different places. Like we mentioned Prague, we mentioned seeing each other in Vegas. I mean, that's not necessarily that new for me, but just we have a very interesting community, and you can kind of get around. So I've been actually picking out a book from each country I'm visiting just to like learn a little bit more about the country. So when I went to Prague, I bought this book on the history of Central Europe and the Slavic Empire, and then of course your pride and joy, the Austro-Hungarian Empire, which basically united all of Central Europe. Yeah, I mean, I've definitely learned a ton of things, but I think that's been something that's been kind of Bitcoin adjacent is I've been learning a lot about just individual countries. Because of the stablecoin stuff, I read a lot. Well, this not just stablecoins, but also that was partly related to it. I was learning a lot about Iran's history, especially its recent history. It has a lot of parallels with China, actually. and was picking up books on Turkey. I finished a book on Turkey called The Modern Turk and other things. So that's I feel like I've gotten a little bit more even deeper into an appreciation of like different countries' histories, and not the kind of histories that are normally, like the big few, Russia, China, United States, United Kingdom, all that kind of stuff. But some of the more countries on the off the beaten path, and that's been because of Bitcoin actually, because most of the time it's because of either research I have to do or research that leads me to those threads, or I'm at a conference and I just literally normally pick up a book at every city I visit.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.